The U.S. has a $189 billion trade deficit with China. Should we punish them and impose higher taxes on imports, or use it as a financial opportunity? China's middle class is growing. They are getting richer and they have more money to spend. By 2015, 44% of China's population will be middle class. The average minimum wage has soared 20% from 2009 to 2010. Household income is growing 9% a year, while consumption is growing 11%. And they are our customers. Exports to China represent 0.7% of U.S. growth, but it is one of the fastest growing export markets. The 10-year moving average of U.S. export growth to China is 20%, and the Minister of Commerce plans to double total imports by 2015.
We're seeing China grow at around 8.5% to 9+%, and that's probably going to continue for a number of years. It's a big population base, and over time, what that means is that the wealth will build up. And I think as they move up on what they want to buy, I think that's going to be positive in terms of demand for a number of U.S. products, and that will actually help provide some buffer to a lot of the activities and businesses in the U.S., particularly if other developed countries are beginning to see slower growth.
And U.S. companies are taking advantage. Coach, Tiffany's, Starbucks, Yum Brands, McDonald's, retail stores are popping up everywhere. McDonald's is adding 200 stores this year and next, and in 5 years plans to double the amount of stores to 2,000.
I think they can achieve about high single digits in the Asia-Pacific region, probably about low-teen growth in China. And that's favorable considered overall growth rate for McDonald's, which I see growing about 6 or 7% for the next few years. I think the fundamental thing, however, is China is one of the biggest consumer of U.S. product, which I think will probably be one of the biggest growth drivers for McDonald's over the next few decades.
China only contributed 3.2% of McDonald's revenue in 2010, but 22% for Yum Brands, up 90% since 2007. With almost 4,000 stores in China at the end of 2010, total sales are growing 29%, with the number of stores increasing 14% year over year. And these fast-growing companies have to import more goods to grow.
China's not self-sustaining in a number of resources, including soft commodities as well as hard commodities. But let's say on the agricultural side, it's going to need to import in and rely on a lot of food products, including items such as wheat coming out of the U.S.
Indirectly, anything that helps economic activity anywhere is going to help growth and create possible employment opportunities, says Josh Feiman, chief economist at Deutsche Asset Management. Feiman says it's possible that the bigger and faster a U.S. company grows, the more jobs it will have to add in the U.S. to sustain its trajectory. So the noise today will be all about the trade war with China, but smart investors will also be looking for the opportunity.